Well, good morning. Welcome to Monday, the first work day after time change. If you're watching this outside the US, inside the US, we're all feeling it, aren't we? Hey, anyway, my name is Daniel McCrane with McCrane Associates, and small business owners choose to work with us to increase their profitability, expand their scalability, and solidify their legacy because we guarantee our work in those areas. So, one of the things that we do is we help business owners structure their business for maximum tax efficiency and asset protection. One of the largest expenses for any business is taxes. The other two would be payroll and employee benefits. We don't work in those areas, employees and payroll and employee benefits and all that. Plus, I would really caution you about trying to cut expenses in those two areas anyway. But we can definitely help you cut some expenses in the area of taxes, and we can make sure that your assets are protected better. So, while I'm talking with business owners, though, about structuring their business differently, I get a lot of questions. One of the questions that comes up is, shouldn't I have an S corporation? Everybody says I should have an S corporation. Well, an S corporation is fine if you are not going to be doing any more tax planning for your business than what an S corporation allows, which means that you'll pay yourself a salary. That's a requirement by the IRS with an S corporation. You must pay yourself a salary. When you pay yourself a salary, that means payroll taxes, by the way, for the business and income taxes for you. So you will be paying tax on that. So the S corporation allows you to set aside a portion of the money that you pay yourself as a dividend. And so you can count that dividend separately. It's counted as passive income, by the way, not active income. So it can't be used to offset or to increase. You can't use it creatively with your active income. But that passive income dividend is going to be taxed differently than your active income salary. And so by doing so, yes, you can save a little bit in taxes. And if that's all the tax planning you intend to do, then an S corporation is perfectly fine. But beyond that, there are 23 reasons not to use an S corporation. I've got a handout that I can share with you if you want to if you want to see that. 23 reasons not to use an S corporation. So if you want to reach out and ask me for that, I'd be happy to share that with you. So some other questions that I get are because in our strategy, we don't say that you should have either a C corporation or an LLC. It's not either or. There are actually advantages to using both together. So another question that I get is, isn't this illegal to have more than one company? No, it's not illegal to own more than one company. And it's not illegal to have your companies do business with each other. For example, I know a business owner who has multiple commercial properties, so he rents some of those commercial properties to businesses who work in those places. He has other businesses that are in these commercial properties here. So he owns several properties. Well, that comes to a lot of landscaping, lawn maintenance that he has to pay out to somebody. So he bought a landscaping company. He bought a lawn maintenance company so that somebody else would come and mow the grass, but it's his own business. So when his business pays somebody to mow the grass, they're paying his business. Now, these are two businesses choosing to do business with each other. There's nothing wrong, nothing illegal about businesses choosing to do business with each other, even if they seem to have a common owner. The key point there is they must be separate businesses doing business with each other. You have to treat them as separate standalone business. So those are some things that we can run across. Another thing that comes up is the strategy that we use um, allows the business owner to be very aggressive in reducing taxes. By the way, do not promise that we can reduce your taxes to zero. I'm not making any promises like that, nor am I saying that we should avoid taxes, evade taxes, nothing. Pay your taxes. But what I'm saying is that there are some rules that allow you to lower your taxes. We can get pretty aggressive with lowering your taxes. There are some trade offs, though, such as the situation that I'm in right now. I'm trying to get a line of credit, and I show very little income. So it's very hard to qualify for something like that. You don't have to be that aggressive. You can make some adjustments. You can work with a financial professional to find out should you be taking a little bit of income so you can offset things like that. Plus, retirement, you have to have earned income to be able to contribute to retirement. So, some things like that. So, just because the strategy I use allows you to be aggressive doesn't mean you need to be aggressive. So, those are some of the questions, common questions that come up when we talk about business structuring. So, if you'd like to know a little bit more about what we do with business structuring, if you want to find out how we can reduce your taxes, especially if that's the most expensive item in your budget, in your business, then feel free to reach out. Here's my number, here's my email address. And so we can have a conversation about saving taxes in your business as well. And don't forget, if you want that handout on 23 reasons not to be an S corporation, be happy to share that with you as well. So have a great day, everyone, and I will see you in the next video.